Well, good morning, active traders, and welcome to our Trading Week Ahead broadcast. Just a reminder, we do have the All Access Pass on sale now. You can go to www.crushwallstreet.com. You get 6 days a week of webinars, a live trading open room, and much more. And if you're not ready to pull the trigger on the year's worth of access, you can get a 3-week trial in the live room for the low price of just $7. Okay, and auto renews at $97 a month, which is much less than I used to charge for the live room, 5 days a week. I'm usually there at 8:30 in the morning, and I stay till at least 10:30. You know, the scheduled time is 9 to 10:30. I'm always there early, so do try my live room. And because it's my 56th birthday tomorrow, yay! Go Ken, it's your birthday. Let's kick Wall Street's butt. Anyway, even if you've already trialed the room, I'm waiving the no repeat trials restrictions. So even if you've trialed it before and are no longer with us, boohoo, re-engage. You can get 3 weeks with me for just $7. And that's a bargain because that's well over, 20 hours of training for $7. Every single weekday morning, we hit the ground running with the biggest and best and brightest breakout charts and gappers we can find for you. As always, all information is for educational use only. Bum, 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 bum. All right, gang, well, let's go ahead and get underway with today's live session. You're in the right place. Let's start off with a look at our S&P. Continues to rally on up to new highs and no sign of slowdown in sight, right? It's still a good, strong directional uptrend. What I want you to look for is cracks in the foundation of the market. Typically that's led, if we do see a reversal, it'll be usually led by the Russell and the small caps. You'll see a reversal in things like semiconductors and healthcare, which have been leading the rally up with really good directional volatility and momentum. As long as the market keeps going up, it'll go up. But what you want to look for is a first sign of a weakness, a sell-off of 2 days support. So if you're long, for example, I'm long TQQQ right now, and I'll buy some more if it gets over 1017. That's my buy stop limit orders, 1017, limit 102. So I'll be buying, adding to my winning TQs trade if it gets up here. But I'm going to stop out of it if it loses an aggregate 2 days of support down here at the 96. Okay, so that's one smart bit of intel there for you, is do have a trailing stop or at least a hard stop in place under the nearest 2 day support for any current long positions you're in. And I hope a lot of you are also in TQs, which I've been calling long for a long time, since it was back down at 40 and 50 a share. It's now almost 100, so a big booyah for TQs. If our S&P starts to lose support and gets down under an aggregate 2 day low, that's the first sign of trouble, right under that 3,300. And if it keeps rallying on up over 3340, good for it. You know, maybe no end in sight to the market. So we'll see which way it goes. The VIX is at a shockingly low 12 reading, right? We're just over 12. We're still in that 12 to 15 basis range. And one thing that was interesting was yesterday's TVIX did a big spike up, like the VIX, right? I was trading TVIX yesterday as usual, right? TVIX, if you trade volatility, it's you buy the dip, sell the rip, right? You buy a pivot, and unlike most trades where you buy a breakout, you sell what looks to be a breakout in TVIX. So it goes down, you buy on a pivot off support, and you sell into resistance on an open range breakout play on the way up. Or feed a swing trade if it breaks north of 41. Lots of upside potential in that guy. So let's take a look at some rockstar charts, shall we? One that I'd mentioned earlier was GGB. You can see it continues to race up. If you're a small cap trader, make sure that you focus on consistent charts. You know, it's very easy to lose a lot of money trading cheap charts if you're over trading or swing trading the wrong types of charts. Another rockstar chart is BLDP. Looking good up here, and you can see a lot of questions. Thanks, folks. I will endeavor to answer. Oh, thanks for registering. Before I forget, do register using my Wealth 365 link. That'll put me in even better standing with Robin and Marissa and the team over there, and I will give you 5 hours all the Trading the Open video recordings of next week I will provide to any of you and all of you who register using my link. And they will send me a list of people who used my link, so I'll know. And I'll only send it to those folks. So here's the link. It's in the chat box. It's summit.wealth365.com/trade mastery. Or just click on the little arrow next to the word chat and the link I just posted there for you. So thanks for the reminder. Appreciate it. I'll be talking on tape reading Thursday at 5 p.m. East Coast time. So we'll be looking at tape reading strategies. So do register using my link, even if you've already registered with someone else's link. Sorry. Losing my voice. And you'll get lots of free videos. Anyway, let's get on with it. BLDP looks like a rock star. Good emerging high volume breakout with good consistent large green candles. Sorry, older I'm getting. I'm losing my voice here. I've been doing so much broadcasting. 6 days a week I do live webinars for the world's traders. Anyway, BLDP has really good directional breakouts. What I like about it is a large green candle at the upper right side of the chart and the fact that it's got an acceleration ramp, a steady uptrend that then accelerates into a classic 45-degree angle breakout. So BLDP is a great breakout chart. Another reasonably healthy one is this APO chart. I mentioned this one to y'all last week. Do keep it on the radar for next week in case it breaks north of 51. A couple of my traders had asked me about Tesla, and we knocked the alerts out of the park back earlier, and it's been quite a momentum runner as well. This is a reversal pattern, though. If you see a loss of 2 red candles and it doesn't recover the second red candle within a few days, even though that's not a shooting star, pardon my voice here, or bearish engulfing, the fact that we have 2 red candles in a row tells us we're starting to see some underlying weakness in the breakout. So you would not want to buy a pivot over at 520. You'd want to sell all open long Tesla if it lost 590 and not touch it with the 10-foot pole unless it breaks over 550. Now the trick about using the 2 red candle reversal, and this is very effective, you may want to write this down somewhere. If you see 2 red candles in a row, 2 red daily candles, and on the 3rd day it loses support and holds under support for any length of time, that's a get out of the trade signal, okay? Now this didn't do it. This is 2 red candles, but price did not get under the support at 470. This one though, the 2 red candles, we did get under the support here at 515. So unless we recover this candle height over the 540, this would be a sell it all under loss of 490. It's very important that you look to maximize your profit in trades by identifying early exits and start to scale out at least. What I'll usually do with my own swing trades, when I lock in profit, I'll sell half of it on a loss of 2 days support, especially if there's 2 red candles or a shooting star or bearish engulfing or other reversal signal up at a top or a near-term top, and then scale out of the rest of it a couple of points below that, depending on the price of the instrument. My favorite pot stock is Canopy Growth. I'm currently long this, and I will be scaling in if it breaks over 26. The pot stocks are finally starting to get higher after getting stoned last year. They got smoked and they went down. A little pot stock humor there. They got smoked and they went down, but they're coming back. It's alive, right? Name this candlestick pattern. And for more on candles, learn exclusively with Steve Nissen at candlecharts.com, my longtime colleague. And I've learned so much from Steve. And it works most of the time, so that's cool. Anyway, look at what's that pattern? Right, Mira? Hey, let's see, a question from a trader. He said last week I'm sending out a link to the Wealth Summit. It's currently in the chat box, and I did email the link out to everybody. But it's, or you can go to my Twitter feed at twitter.com/Ken Calhoun. And I posted it in the chat box. Yeah, it's a bullish engulfing, so it led to a nice breakout. Now, you want to always use your 50 SMA on pivots, right? That'd be an exit target. You know, if you buy, say, above a bullish engulfing high and it's still underwater, which is defined by something that's under all three major 200, 150 SMAs, a recovery to the nearest moving average is your exit target, okay, which hit in this case. Then it finally broke back out over that, went sideways forever, and now it's coming back to life because now on Monday it broke out over the 100 simple moving average. So after a big epic drop, this guy's finally starting to come back to life. We'll see if canopy growth looks good. As I mentioned, my three favorite pot instruments to trade are in order: canopy growth, the MJ ETF or ETN. MJ is in Mike. What was J? Hotel India Juliet. Anyway, MJ, and then Tilray, TLRY. A really good directional volatility in that guy. In the meantime, our VIX is way down here. What you want, another technical signal to look out for, start to be conservative and start to scale, or at least I'm going to start to scale out of my open long trades like my TQs and whatever else I'm in that's long other than inverses. If we start to get back over the 13 in our VIX, and particularly if we get over the 14, and especially if we get over 15. So this is a bearish reversal type of a lead indicator. When the VIX goes down, the stock market's going up. When the VIX spikes, that's when the market drops. Now VIX is at support now, so it may well be due for a bounce at some point, but I'd wait until the VIX gets over 13 before going long in our inverse instruments like SQQQ and TVIX and whatnot, and when especially give preference to being out of the market and all cash and everything except inverses if our VIX holds and breaks over 15. We're currently in a 12 to 15 channel. Be sure to learn the VIX and how to use it in my live trading room, because I'm an expert in trading the inverse ETFs. I've done so for over a decade, and if you want to learn the ins and outs of those, make sure you understand how to use the VIX. If we look at industry group or sector charts, you can see our semiconductor sector is taking out all-time new highs up at 1920 on the Philly Sox. Our pharmaceutical sector is also looking healthy, right, with a nice breakout up here to 670. So remember, never underestimate how far things can run before they slow down, because there's so much opportunity out there, but what you want to do is figure out where the next play is. Let's look at some intraday charts from yesterday. A trader had mentioned Novavax, and you can see here on the longer term chart, it broke right above the 200 SMA, which is a good buy signal, especially because the volume, we have both price action recovered the 200 SMA, and volume is up at a 90-day high, over 9 million shares in Novavax. And here's the 2-day 1-minute candlestick chart, and you can see it did a nice 45-degree angle breakout. After yesterday's or Thursday's consolidation, ran all the way from 5 to just under 6. By the way, good news too, I will be doing more of the free trading the close sessions or closing bell sessions between 3:30 and 4 o'clock moving forward. Let me ask you all a quick question. For those of you who are day traders and want to participate in those for free, do you prefer something like 3:30 to 4, or is like 3:45 to 4, just the last 15 minutes good enough? Do you want more time or less time? I can hit the ground running for you and cover that in the last 15 minutes. It can quickly go through the day's best charts, where our entries were and where the exits are. Or if you want a little bit more time for Q&A and whatnot, type in right now either 3:30 or 3:45, and I'd appreciate it. So far everybody's at 3:30. Okay, more, 3:30, 3:30, more time. Thanks, Reneth, Mira, Bruce, Phil, Gerald, Kurz, Jake, Robert, John, Ed, Jim, Stephen, Andrew, John, Don, James, BR, Arnold, Frenchie, Don, Donna. Okay, everyone said 3:30. Okay, 3:30. Okay, so I will start doing those at least Tuesday, Wednesday, Thursday, because it's over, I think, 1,600, over 1,500 for sure people registered for those already, so look for those. All right, good news. And to register, if you've not done so already, for the free open house live room sessions, simply go to trademastery.com, www.trademastery.com/TTO free for trading the open free. And that'll take you to the registration link. Anyway, another good runner in yesterday's markets was GSX. NK was a big runner on Thursday, did a mean reversion pullback and then just sideways chip chop, right, which is very common. That's a pattern that I say often after a big candle day, you get a small candle day. Now this kind of chart would be horrible for and too risky for swing trading because the downside potential is too big. But it's great for day trading because the intraday point range is good. Oftentimes you have to strike a balance between charts that make sense to trade with lower intraday point range but more consistent longer term chart. That's what you want for swing trades versus day trading charts with big ranges that may not necessarily have a long-term uptrend or any fundamentals or anything other than straight momentum. So knowing the difference between those is one thing I spend a lot of time covering for all of you in the live trading room because I get a lot of questions. A lot of you do, like I do, both day and swing trading. Picking the right chart for the right trading style is absolutely critical because you're going to get your head handed to you if you try and swing trade a chart like these cheap charts with big multi-point ranges, but you can do really well day trading them if that's your preference. So does that make sense? You have to know the difference visually between charts worth day versus swing trades. So anyway, this is a nice big booyah run from the low fives to just under 10, almost a doubler, right? A double top up here. As I taught traders, and you may want to refer to my award-winning stocks and commodities articles, I like to buy above whole numbers and sell right under the nearest whole number. SBGL was a good runner for us on Thursday as well. I should say yesterday. It was moved down on Thursday as a runner yesterday. It went down for us on Thursday, went up for us yesterday. A nice classic gap continuation at a 2-day high. One thing you can do to potentially dramatically improve your win rate as a trader is focus on out charts on out days, meaning gap up or gap down days in the S&P and gap up or gap down charts, mainly gap up charts and individual stock picks. And so this is a good example of that. We knocked it out of the park yesterday for our members. I think the long call was 1080 and it ran up to 1120. Trader had asked about this one when it was way up here right near the 25. I said to go short at 2460, right, or 2440. So that was a good example of a pattern. The sharper the angle of the breakout or the breakdown, the more likely it is to mean revert back to the midpoint, right? So if you have a 45-degree angle, that's very strong and you never want to fade that. You never want to go short in those. But if it's a straight up, like Superman leaping to the top of a mountain, top of a skyscraper building anyway, if it shoots a 90-degree angle straight up, at the first sign of trouble on that, especially a multi-pointer like this, you want to go short and use the midpoint mean reversion as an exit target. So that's why I called the short up here for everybody, and I said to cover right above the 23. That was a good reversal play. The same thing works in reverse. If you see a big drop and then it starts to bounce, the sharper the angle of the drop and the more points it runs, the first sign of a volume pivot, you want to look for a reversal. So that's a good chart. Good intelligent approach to trading the markets. All these patterns, are repeated, and the challenge, or what I do for everybody, is not only do I teach the patterns in venues like this, but I give you specific alerts and walk through step by step in the live trading room at Trading the Open. So be sure to be a live room member if you're not. You have my word, the value is phenomenal. I used to charge $495 a month and get it for a very long time. Now it's only $97 a month because I have so many new members. I'm at next to the year 2001. I've got record-breaking attendance currently right now because people are fed up with the low float under $10 pop and drop chop stock outfits out there. We want more consistency. So to get that, you want to trade charts with bigger ranges. These are all good high volatility charts to pay attention to next week. Six Flags as the bounce holds. This one I put in a buy stop order yesterday, which never filled at $1.85 because it did a big run up, and then it started a crash and it got halted and it crashed again. I was going to buy it if it broke 185, but it never did. So I'll still buy it next week if it holds down here and breaks out. Remember, capital markets are closed on Monday in observance of Martin Luther King Jr.'s holiday. So next time the markets are open are Tuesday. And I'm more short from a capital allocation standpoint than long right now. I'm mostly cash, but I've got maybe $3,000 worth of inverses that I put on yesterday on the speculation that we may get a market drop. When markets drop, they frequently drop right after the weekend, and normally that's Monday, but in this case it'll be Tuesday. The reason is, oftentimes over the weekend there's some bad news that comes out somewhere, and especially after the markets ran up so much, I'm looking for reversals in the market rather than continuations where the volatility is concerned. Anyway, I'm going to thank all of you for being here. Let's see, trying to find the right slide here. I'll just put this here. Do register for the live room. Even if you've been a trial member before, I will, because it's my birthday tomorrow and I'll be 56 years old, I will allow you to retrial the room. You get 3 weeks with me for only $7, and most of you stick around, so that's good. Let me know if any other last questions before we wrap. Hey, fellows, kind of all over the place in terms of votes for the domain name. Hey, good to hear it. A trader saying they did good with NK. Hey, thanks, Ed. Thanks, Judy. Appreciate it. Hey, John. Hey, Mike. Hey, Perry. Hey, Donna. And we've got lots of charts to work with, so yeah, it's an exciting time to trade. And my hope is that in this year I can go even further and faster and reach even more people than I already reach. With thousands of you, it's a lot of work, but you guys are worth it. So I want to figure out how to make bigger winning trades more often, kind of more a way of life. And one of my goals this year is simplification. And with all the technical expertise I have, sometimes I go a little fast and I realize that. So I want to break things down so it's very step by step, very unambiguous, very clearly defined, which I do every day for everyone, but I want to do an even better job of that and do things like PDFs and instructional brief videos and do more on social and all the rest of it. So we got lots in store for everybody this upcoming year ahead. I wanted to thank all of you on behalf of all of us here at Trade Mastery. Kind of running inside joke. I'm an army of one, thousands of you and just me holding down the fort here for 21 years. And it's been a real honor having all of you with me, and I look forward to working with you in the upcoming year ahead as well.